Good morning. Welcome to Basic Introduction to Bookkeeping. I'm Dave, and I'm thrilled to embark on this financial journey with you. We're going to demystify bookkeeping, what it is, why it's crucial, and how it forms the backbone of every successful business.
Dave, I've always heard bookkeeping and accounting used interchangeably. Are they the same thing?
Excellent question, Laura. It's a common misconception. Think of it this way. Bookkeeping is the recording phase, and accounting is the interpretation and reporting phase. Bookkeeping is the foundation upon which accounting is built. It's the daily, systematic recording of all financial transactions.
So it's like keeping a detailed diary for a business's money?
Precisely, a very accurate and structured diary. And that brings us to our first key concept, transactions. Every time money changes hands, whether it's a sale, a purchase, a bill paid, or a salary issued, that's a transaction. These transactions are the raw data. The bookkeeper's job is to record them accurately and systematically. And how do we do that? Through something called the double entry system. Has anyone heard of it?
No.
Not me.
Not to worry. It sounds complex, but it's beautifully logical. Every financial transaction affects at least two accounts. For every debit, there must be an equal and opposite credit. It ensures that our books are always balanced, like a perfectly calibrated scale.
So if I buy a coffee for the office, is that a debit and a credit?
Exactly. If you pay with cash, your cash account would be credited, money going out. And an expense account, perhaps office supplies and refreshments, would be debited, the expense increasing. We'll dive much deeper into debits and credits later, so don't feel overwhelmed yet.
What kind of records do bookkeepers actually keep? Is it all just in big ledgers like in old movies?
While the principles remain the same, the tools have certainly evolved. We primarily use a few key financial statements that summarize a business's financial health. The most fundamental is the balance sheet. The balance sheet is a snapshot of a company's financial position at a specific point in time. It shows what a company owns, its assets, what it owes, its liabilities, and the owner's stake in the business, its equity. And it always balances. Assets must equal liabilities plus equity. It's the golden rule of the balance sheet.
So, it tells you how rich a company is right now?
It tells you its financial standing, yes. But to understand how profitable a company is over a period, we look at another crucial statement, the income statement, also known as the profit and loss statement. The income statement summarizes a company's revenues, money earned, and expenses, money spent, over a period, a month, a quarter, or a year, to show whether the company made a net income, profit, or a net loss. It's how we see if a business is truly making money.
This is starting to make sense. So, bookkeeping is about meticulously recording everything so we can create these statements and understand a business's financial story?
Exactly, Laura. You've got it. Bookkeeping provides the organized data that allows business owners, investors, and even employees to make informed decisions. It's not just about numbers, it's about clarity, control, and foresight.
This was really interesting, Dave. Thanks.
Yes, thank you. I'm actually looking forward to learning more about bookkeeping.
That's wonderful to hear. Remember, bookkeeping might seem daunting at first, but with patience and practice, you'll become fluent in the language of business. Class dismissed. Basic Introduction to Bookkeeping presented by Bean Counter.